Moderator, it is my privilege as chairman to report to the General Assembly, and I lay on the table the annual report and financial statements of the Investors' Trust for the year ended 31st December 2013. Markets remained volatile in 2013, and the aftershocks of the recession are still with us. The patient is not yet off life support. But I'm pleased to be able to report that the Trust enjoyed generally favourable markets last year, and the managers of both our Growth Fund and our Income Fund outperformed the benchmarks by which we measure their performance. The full details are, of course, available on the Church's website, and I hope all of our investors have by now seen a copy of our annual review. The income earned by our Growth Fund exceeded our expectations, thanks in part to some special dividends, and as a result, we were able to increase the distribution per unit for the first time in 5 years and pay 16.75 pence per unit. We hope to be able to maintain this level of distribution in 2014. But as many of the companies in which we invest account in other currencies, a lot depends on sterling exchange rates. The income earned by our Income Fund was also a little ahead of expectations, and that enabled us to pay the distribution of 50 pence per unit, which we had forecast, and to add a little to reserves. We hope to be able to at least maintain this level of distribution in 2014. Our deposit fund continues to suffer from the effects of quantitative easing, and we were only able to pay a total of 0.7% on deposits. I cannot even now guarantee that this represents an all-time low. There is, however, one milestone to which I would like to draw attention. At the end of March, the total unit value of our investors' holdings in the Growth Fund and in the Income Fund was over £100 million higher than their cost. In other words, the Trust's current investors are sitting on a potential profit of £100 million. This is a very significant sum for the Church, and I should like to pay tribute to all of the fund managers and trustees who have contributed to this outcome over the 20 years of the Trust's existence. Of course, I must now issue a statutory health warning. Past performance is not necessarily indicative of future results. These funds are invested in equities and bonds, and as such carry both income and capital risk. At present, a number of investors in these funds reinvest their distribution income in additional units. Currently, this involves cashing their dividend cheque and sending us another cheque for the amount they wish to reinvest. Very soon, we hope to be able to offer an automatic reinvestment scheme into our deposit fund, and from there, it will be easy to transfer monies to the fund of your choice. Our deposit fund has over £100 million of church funds in it. The fact that we can only distribute 0.7% per year is a concern when inflation is eroding the value of capital by 2.5%. This means that if a congregation puts enough money directly into the deposit fund to reslate 100 square metres of roof, at the end of the year, even if they save the interest, they will only be able to reslate 98 square metres. The evidence seems to suggest that far from being a home for short-term funds, some investors are putting money in the deposit fund for years at a time. While we cannot give advice, we do encourage treasurers and others to review their fund allocations regularly. We are also discussing with the general trustees whether the default allocation, which routes congregational monies through such central funds as the Consolidated Fabric Fund, are still appropriate. In other words, they are considering whether a lower proportion of money should be allocated to the deposit fund while interest rates are so low. While doing our best to achieve our investment objectives, we also try to invest ethically. We do not invest church money in firms engaging significantly in tobacco, alcohol, gambling, or armaments. Or rather, we instruct our managers and their advisors not to do so. As we heard yesterday from the convener of Church and Society, investors are also being called on to take a view on divesting from fossil fuel companies. I'm sure we all want to transition to a lower carbon economy. Whether we should avoid investing in the raw material producers while being more tolerant of those who actually burn the fuel is at least worth debating. Another argument, again as we heard yesterday, is that by remaining a shareholder, we can join with other like-minded shareholders and try to persuade the board to change their strategy. Maybe as shareholders, we should encourage all of the fossil fuel supply chain to adopt lower carbon methodologies. In view of the complexity of these issues, I welcome the opportunity to join our colleagues from Church and Society and the pension trustees to wrestle further with these issues. I should like to end by thanking all of the trustees for so generously giving their time and talents to the Trust and to the Church. We welcomed 4 new trustees to our membership this year, and all of them are playing a full part in our work. We are also well and efficiently served by the Church's staff, who work hard behind the scenes to ensure our affairs run smoothly. Moderator, I submit the report and accounts of the Investors' Trust, and as I am not a commissioner, I ask the Acting Chief Clerk to move the deliverance.